Every morning, the market opens, and millions wake up to the exact same feeling: fear. It's the anxiety of timing the wrong entry and watching hard-earned capital evaporate. Trading algorithms and closed systems promise a way out, but they often make that anxiety worse. When money is on the line, trusting an opaque mathematical process you don't actually understand creates a constant, low-level panic. We stare at flashing charts and screaming indicators, hoping to guess what happens next. But the market has no interest in human expectations. It doesn't read our predictions. To find actual clarity, we have to stop asking what the market will do tomorrow. We have to look strictly at the evidence it leaves behind today. That evidence exists entirely in raw footprints. It is permanently stamped into price action, trading volume, and continuous shifts in open interest.
Researcher Shakti Tiwari looked at these footprints and asked a different question entirely. Can this underlying human behavior be captured and converted into a transparent, testable, and fully auditable system? Millions of raw flowing data points are useless. The noise only becomes valuable when engineered and strictly structured into recognizable patterns. Market survival relies on the quality of data structuring and the depth of behavioral analysis. Finding meaning in that structure requires a specific scientific process called feature engineering. This is how we filter out the market's constant static to isolate clean, reliable signals. This 3D scatter plot shows a standard straight trend line failing to map complex market data. But decision tree algorithms like XGBoost locate hidden, nonlinear relationships. Another model, LightGBM, enters alongside it, deployed for highly efficient learning and rapid experimentation with the same datasets. We don't make assumptions about which mathematical approach is better. We put them head-to-head and force them to compete. The most resilient AI systems emerge only when models have to prove their stability against hard historical evidence. Only the strongest math survives. To survive that competition, these models simultaneously monitor dozens of specialized metrics, reading the volume-weighted average price, calculating shifts in relative strength, measuring market volatility, and tracking exact order flow mechanics. This line chart illustrates a common flaw known as overfitting. An amateur AI model perfectly memorizes past peaks and valleys to look flawless on paper, but the moment it hits the unscripted live market, the logic shatters. It memorized history instead of learning actual behavior. To prevent this, we apply out-of-sample validation and walk-forward testing. The system proves it adapts step by step rather than relying on the perfectly memorized past. Even the most logical model requires strict risk parameters. Real-world friction, like order slippage and set-in capital drawdowns, must be mathematically accounted for. An AI model's real worth is never found in a beautiful historical backtest. Its value is measured entirely by its verifiable ability to survive the chaotic, unmemorized variables of tomorrow. This methodology actively moves away from selling closed institutional black boxes. The focus is now on building local, privacy-first AI systems designed to run effectively on ordinary consumer hardware. By utilizing quantized models and practical machine learning research, the heavy computational lifting once reserved for massive financial firms is placed directly into the hands of individual builders. This is supported by an open research ecosystem, including build-it-yourself frameworks and Tiwari's published texts, Option Trading with AI, and The AI Opportunity. If you are going to risk your capital on a highly complex financial system, you need the tools to completely dissect and understand it. That technology must be democratized. In this ecosystem, the machine plays a highly specific role. It processes thousands of data relationships simultaneously, maintaining perfect memory without ever experiencing psychological fatigue. But the final execution remains entirely human. The trader is responsible for providing context, maintaining absolute discipline, and engaging the final mechanisms of risk control. When you build these systems, models will occasionally fail. Code will break. But when that happens, you face a clear choice: revert back to emotional guesswork, or rebuild your infrastructure using hard evidence. Step away from the endless noise of prediction and move toward the clarity of evidence-based research. Build, test, verify. Shakti Tiwari's research offers a path through market uncertainty by prioritizing visible evidence over gut feeling, turning a chaotic environment into a transparent, audit-ready framework.